Hello everyone, welcome back to Stock Market Meridian. Today is 8th July 2026 when you are watching today's post-market report. Let's begin our video with today's market action. Today, Indian markets witnessed a sharp decline, and the primary reason was the sudden escalation in geopolitical tensions in the Middle East. According to the latest developments, yesterday Iran allegedly attacked oil tankers linked to Saudi Arabia and Qatar. In response, the United States launched military strikes on multiple Iranian locations. However, Iran has completely denied attacking those oil tankers and instead accused the US of creating a false narrative to justify military action. Iran has also warned that it will give a much stronger response in coming days. Because of these sudden escalations, crude oil prices surged by nearly 5 to 6%, creating fear of supply disruption from the Middle East. As a result, global equity markets witnessed heavy selling pressure, and Indian markets were also impacted. According to the investor concerns, US President Donald Trump stated that the ceasefire agreement with Iran is now over, and also said that negotiations with Tehran is waste of time. These comments further increased uncertainty across global financial markets. At the same time, another major development came from Iran's Islamic Revolutionary Guards (IRGC). The IRGC claimed that it will launch a joint missile and drone operations targeting nearly 85 US military facilities across Bahrain and Kuwait. These are the important locations for US, were reportedly amongst the targets. Following these attacks, air raid sirens were activated across Bahrain. The Bahrain government instructed citizens to immediately move to safe locations, while Kuwait confirmed that its air defense systems intercepted multiple incoming threats. These attacks came after US military carried out airstrikes on more than 80 Iranian targets, saying the operations was a direct response to recent Iranian drone attacks on commercial oil tankers passing through the Strait of Hormuz. Now both Washington and Tehran are accusing each of other violating last month's ceasefire agreement, raising fears that this conflict could turn into a much larger regional war. This remains one of the biggest risks for global markets over the next few trading sessions. If tensions continues to rise, we could see further volatility in equities, crude oil and commodity prices. Also from tomorrow onwards, quarterly results are coming out, beginning with TCS and remaining IT companies. So these are also a main concern for further. What do you think about this situation? Do you believe this conflict will calm down soon? Or could it become a bigger geopolitical crisis? Let me know your opinion in the comment section. Before moving further, a quick reminder. Every morning before market opens, I upload a detailed pre-market report, and every evening after the market closes, I bring you a complete post-market report covering all the important news, company updates and market moving events. So if you don't want to miss any important market updates, make sure to subscribe to Stock Market Meridian and press the bell icon. Now let's move to today's important companies updates. ICICI Prudential Life Insurance reported a strong business update for the first quarter. The company's new business premium increased by 21.3% year-on-year to 4,866 crore rupees, indicating healthy growth in new policy sales. Its annualized premium equivalent also grew 14.6% to 2,136 crore rupees. On the retail side, the retail weighted received premium increased 13.4%, while retail APE grew 8.9%. Overall, the company's business performance remained healthy with steady premium growth across key segments. Next, Natco Pharma's board has approved an investment of up to 1,400 crore rupees in its wholly owned subsidiary Natco Pharma South Africa. Out of this amount, nearly 1,069 crore rupees will be used to acquire an additional 19.6 million shares of Adcock Ingram Holdings, increasing Natco's ownership from 13.75% to 49%. Adcock Ingram generated revenue of nearly $423 million and EBITDA of approximately $59 million during the first 9 months of financial year 2026. After increasing its stake, Natco will be able to recognize 49% of Adcock's profit after tax in its consolidated financial statements. According to industry analysts, this acquisition could increase Natco's annual consolidated profit by nearly 15%, adding around 250 crore rupees to the company's bottom line. And also, management expects to complete the transaction before the end of July 2026. Next, VK Energy's chairman and CEO Gopal Kabra speaking on CNBC TV18, announced that the company has secured major new orders in the solar water pump and solar rooftop segments. The company is now expanding into the retail consumer market while maintaining a healthy mix of government projects. Management expects this strategy to help maintain a strong EBITDA margin of 18 to 20%. The increased focus on rooftop solar projects is also expected to reduce project execution time and improve working capital efficiency. Guys, if you are finding these updates useful, don't forget to like this video. And please share the video with at least one friend so that your support really helps the channel to grow. Next, INOX India has secured fresh order worth approximately 939 crore rupees within just a few weeks. The biggest highlight is one of the mega order worth over 150 crore rupees from space exploration industry under its industrial gas business. Remaining are from industrial gas with 871 crore rupees and LNG gas business with 44 crore rupees and last Cyro Scientific Solutions 16 crore rupees. Management stated that global demand for advanced cryogenic technologies continues to rise, especially from sectors like space exploration and clean energy. Next important update is the Indian government is preparing to introduce mandatory cybersecurity audit for all connected vehicles and electric vehicles. The new regulatory will strengthen security requirement for vehicle software and over-the-air OTA updates, reducing the risk of hacking and software failures. As modern vehicles becoming increasingly software-driven, secure remote updates are becoming extremely important. One company expected to benefit from this regulatory is KPIT Technology, which specialized in automotive software, digital engineering, and cybersecurity solutions. So, these stricter regulations would lead to higher demand for this company's services. Next, Ceigall India has emerged as the L1 bidder for government road project worth 704 crore rupees. And the project has been awarded by the Ministry of Road Transport and Highways. Also will be executed in Arunachal Pradesh. This construction period for the project is 48 months. Next, global brokerage Morgan Stanley has maintained its underweight rating on Oil India. The brokerage reduced its target price from 404 rupees to 382 rupees per share. According to the report, higher capital expenditure requirements, continued government intervention, and a challenging crude oil environment could put pressure on future earnings. Morgan Stanley also believe further earnings downgraded are possible after the company's upcoming quarterly results. Next, South India Bank shares declined nearly 9% during today's trading session, touching an intraday low of 43 rupees 27 paisa per share. However, analysts believe this decline was largely due to profit booking, as the stock had already rallied nearly 30% over the last 3 months. Meanwhile, the Reserve Bank of India has approved the appointment of Mahesh Muralidhar as the bank's new managing director and CEO. He will officially assume office from 1st October 2026 for a period of 3 years. The appointment will now be placed before the Board of Directors on 16th July, followed by shareholders' approval. So these were all the important market updates for today. If you found this today's report useful, don't forget to like, share and subscribe to Stock Market Meridian. I will meet you again tomorrow morning with another pre-market report before market opens. Until then, thanks for watching. Signing off. Bye bye. Jai Hind.